Welcome in, folks. We got a three-piece to react to in this one here today. Three videos up here. First one up here, Meta stock should see a good year in 2024. I want to react to this analyst here, hear what he has to say about Meta stock. It is the biggest position in the public account, so we'll speak about that. We'll react to that one in this video. Then Dan Ives. I want to hear what Dan Ives had to say this morning. He talked about Apple, Tesla stock, AI, a bunch of other things, and kind of his outlook for 2024. So we're going to go ahead and react to that one. I want to share my opinions and perspectives in regards to that video. And then this one, Tom Lee, 2024 is going to feel a lot of tailwinds coming together. So interested to hear what Tom Lee has to say. That one's from a few days ago. I actually haven't got to see this one. I've been wanting to check it out, though. So appreciate everybody joining me as always. Thanks so much for being here, folks. Merry Christmas, belated Merry Christmas to everybody who was celebrating yesterday. And if you watch my channel, there's a good probability you might be the person that has to give all the gifts. Okay, you might not get as many gifts. You have to be the giver. Okay, so you know that's fun too. Okay, that's fun as well. You get everybody the better gifts than we get, right? Appreciate y'all. Thanks for being subscribed. And let's go ahead and jump into this.
Play the year of efficiency. Has it paid off for Meta? Stifel's Mark Kelly joins us now. It's nice to see you. So it obviously paid off. I mean, the stock's up huge, 200% or so. What does it mean going forward? Did we pull so much forward in this year of efficiency that next year is not going to be as pretty from a performance standpoint?
Yeah, good morning. Thanks for having me. Happy holidays. You know, do I expect another almost 200% outperformance or performance in 2024? The answer is no, but I do still think there's a little bit to go, not only from just being efficient, but also just, some drivers on the top line as well. Things from a recently announced kind of partnership with Amazon. You've got some things that Apple has changed that actually benefit Meta more than the other social names. So I think, 2024 should also be a good year for Meta.
I mean, you're still looking for a considerable bump in the stock, right? Over $400.
I am.
Hold on. Hold your horses for just a moment, okay? First off, $400, we'll get to that in just a moment. But look at this. I mean, the background, there's all like no one on Wall Street today. This is insane. Like, it's completely silent behind him. If you ever watch these reaction videos with me, it's always very noisy behind Scott there. And today it's just very, very quiet. 400? I mean, Meta's like 350 plus right now. So 400, that's not even very far at all. 400?
One thing I really want to hammer home is some of the changes that Apple has made over the last 2 years, negatively impacted Meta and some of the other social names.
True.
Apple's actually making it a little bit easier and better for advertisers to target people, but also measure the effectiveness of their ads. So some of those changes have already rolled out, but there's one that's very specific that is just rolling out now that favors Meta more than others. I'm not going to bore you with the details, but essentially, if you're a smaller advertiser, you can get more granular data back from Meta or back from Apple if you're using the most scaled platforms, and by far that is Facebook and Instagram.
What happened to the metaverse? And
what's interesting for Apple, they made these data privacy changes, and they say it's for reasons for the company. Really, it was to hurt Meta, in my personal opinion, understanding that the next battle to be fought here is the metaverse, and I think both companies are going to go head on head in regards to that, right? But the more Apple's, I think, starting to understand, the more they try to hurt Meta, the more you're going to hurt the economy, just like factually, right? Like, Meta's the biggest advertising giant out there in terms of, like, if you want to advertise as a small business, mid-sized business, you use Meta. Well, if those companies can't advertise as effectively, then they can't make as much money. If those companies can't make as much money, guess who's buying all the iPhones and the Macs and the iPads? Small businesses, mid-sized businesses, and the owners of those businesses, right? And the employees of those businesses. So if you hurt those businesses, you're hurting yourself as being Apple. That means you're going to sell less iPhones if people are doing not as well, right? Because their ads are not as effective. They're not going to go out there and say, yeah, let's go spend $40,000 on a whole bunch of new MacBooks for the team, or for the bunch of new Macs for the team, or something like that. We'll do with what we got for our equipment right now because we're not doing as well as a business, right? So I think Apple slowly started to realize that. I talked about that like a year or 2 years ago, and it's shown in Apple's growth rates. Apple's literally a shrinking business this year, right? Yeah. You want to hurt Meta? You're gonna hurt businesses. You want to hurt businesses? Get ready to sell less iPhones.
In the metaverse, amid the year of efficiency and the pivot to AI.
Yeah, I think the metaverse is still an overhang. I don't want to go so far as to say that investors are comfortable with that investment, because they're certainly not. In our model, we're at least looking for another $15 billion in operating losses for that segment in 2024.
Not small.
But I do think the AI initiatives that they have really, carried through across the entire platform. So the recommendation
100%.
engine for the users has improved. We've seen time spent improve there as a result. Things like dynamic creative, so coming up with different advertising units on the fly, things like that. Meta's using AI for those types of tools. And then on the back end, things that we as consumers and users don't see is using their models to basically write code more efficiently on the R&D team. So there's a lot of ways
100%.
they're using these AI tools, that go beyond the reality labs.
No one talks about, this gentleman's speaking about it, but hardly anybody talks about the fact that Meta is arguably the biggest AI beneficiary in the world outside of NVIDIA. I mean, just people don't understand how much is going on beneath the surface. I think if you run a business and you use Facebook to advertise or Instagram for advertise or you use even the platforms, you are starting to recognize this. But I think a lot of people that are kind of like outsiders don't even recognize it. I'm like, this is the biggest AI play out there, probably other than NVIDIA as far as a direct AI play.
Really quick before I let you go, I'm looking at shares of Snap. It's in your coverage universe, which is why I want to ask you about it. What do you recommend people do with a stock that's up more than 30% in a month and it's doubled in a few months?
Yeah, it's kind of a stay away for us at this point. I would say we're not getting enough positive feedback from advertisers for us to get excited about the top line. And then also they're really ramping their AI investments, which, is weighing on margins. So for us, it's a stay away at this point.
Yeah, I agree with them on that in regards to Snap. Now, in terms of Meta, what am I expecting for the stock for 2024? If you forced me to guess what Meta stock is this time next year, I would guess 475. That would be my guess, right? And so much can change. What if the market gets hit bad? What if we have a great year in the market that could obviously maybe push Meta 500 plus next year? There's so many various factors there. If you put me on the spot, I'd say like maybe 475, something like that. I expect it to be a very good year for Meta. With that being said, it's not going to be a 200% year, right? We're not going to watch Meta stock go from 350 to 1,000 or something like that. That'd be awesome. As it's the biggest position in the public account, I would gladly have that. I do think Meta's probably going to 1,000 long term, and probably a lot higher than 1,000 long term. But it's not happening in 2024. I mean, this is a year where maybe we start approaching 500 or something like that, right? We jump over 400 for the first time, break new all-time highs, and then maybe we head up to 500. So that's kind of my thoughts on that. Should be a great year for the numbers. Income statement should be phenomenal. Balance sheet's always phenomenal. I think more and more Wall Streeters will start to understand that Meta's one of the most well-positioned in the AI opportunity, and we'll have some fun. So anyways, Meta's, the thing I love about Meta is not just the gains it's gotten us, right? $423,000 in gains, and it's going to be a lot more in the future. I don't ever worry about this stock. There's other stocks in my portfolio that I have to think about a lot, keep track of them. I don't know. Meta, it's just easy. It's just an easy hold for me, man. Easy. This doesn't keep me up awake at night. Like, it's just easy, man. I don't wake up like, oh, crap, I got to sell some of my Meta shares tomorrow. Heck no. And that's fun in the stock market. When you can just gladly hold a stock, if it dips in any major way, buy more shares, and you don't stress over it ever, you're winning, man. You're winning, especially when it's a moneymaker like Meta is, right? Next one up here, Dan Ives, 2024 Tech Outlook.
For Apple, it feels like it's going to get off to a rough start.
I think it's time to get out the popcorn because, in my opinion, this is the next stage of, I think, the growth phase in Cupertino. And I think, look, if you look what's happened...
How do you factor in this kind of stuff? I can't buy a watch. I need a new watch, and I can't buy it right now.
Look, we're talking less than 1% of disruption from Apple Watch, in terms of in the actual quarter. And I think, look, it just speaks to they're going to have patent issues like this on healthcare. But there's a renaissance of growth on iPhone units, services, double digits. And that's why I think a lot of the bears right now, they're deep in those caves in hibernation mode. I think a year from now, we have a $4 trillion market cap on Apple.
You say the bears had a great fictional story, okay?
A Netflix fictional.
A Netflix fictional story. We all want to be in it.
Not Apple Plus?
I got to hand it to you. The shirt just screams, full.
So one side of me in regards to Apple is like, come on, man. Like, they're not doing anything special. It's like, yeah, come out with the next iPhone, next iPhone, next iPhone. They've done that for, 16 years in a row or whatever now, or 15 years in a row. But what I'll say is, there are a lot of people that use old iPhones, right? And those people are going to be forced to upgrade at some point in time. So although, is iPhone 15 the iPhone that everybody says, I got to go get the newest iPhone, this is amazing? No, let's be honest, it's not. I don't hear any hype about an iPhone 15, right? But with that being said, people's old iPhones, people are going to get sick of them. Their batteries are going to start working, worse and worse and worse. You have to charge it more and more. They're going to, eventually have to upgrade. And so, there's a lot of people still got iPhone 10s, iPhone 12s, iPhone 8s, iPhone 7s even, believe it or not. And at some point in time, those people are going to have to upgrade. And so, that is the good thing for Apple, right? That, even if they don't come out with a banger product, people eventually have to get a new one, even if people aren't like super excited about, I want to go get the new iPhone like they were many years ago, right? Because for a while there, it was like every iPhone came out with was a banger, and it was like, oh man, I want to go get the new one. But that was really the first 5-7 years of iPhone, right? After that, clearly, the excitement around iPhone started to dwindle away, and it's kind of been like that ever since, right?
Full of confidence, full of vigor. But you look at the China story, so make sense of this for us. How do you get to $4 trillion when you still got the government pushing back against Apple products? It was a headline just in December. Is that myth or is that a headwind?
I think it's a headwind, and ultimately my view in terms of China is that I'm not saying it's roses and champagne in Beijing with Apple, but we are seeing growth. And that's something we've seen come out of Asia checks even over the last week, because you have 100 million iPhones in China in the window of an upgrade opportunity. As those upgrade, and look, for Huawei, it's a good phone, but realistically, it's an iPhone 12. I'm saying from an actual functionality perspective. So I do think that it's a headwind they have to contend with, but it is the hearts and lungs of the Apple story. And that's why a lot of the bears at 500 billion, a trillion, trillion and a half, 2 trillion.
Well,
it's all about the China.
3 trillion now.
It's all 3 trillion, I think, going to 4 trillion. It's always about that big bad wolf, the China story. And the actuality, China has actually been fueling the engine.
Well, let's talk about what the bears are saying right now, because they're saying, you think about in terms of the product lineup, that Apple really hasn't had a hit since the AirPods, and that was all the way back in 2016. So you talk about this new growth, but from the product lineup, where is that going to come from?
Well, first off, the install base, it's unparalleled. It's the best install base in the world. So just from an install base perspective, you have 250 million iPhones in a window of an upgrade opportunity. I think that's why iPhone 15 so far, Christmas came early, a strong holiday season. But for 2024, and Gurman's talked about this as well, I believe you're going to have not just new phones that come out from an iPhone 16, but we believe you're going to have the iPhone App Store, which is going to be an AI app store focused on AI apps. That's going to be something that's going to be incremental for services. And I think that's very important.
The way I would put Apple is kind of like a musician that gets super popular, right? And that musician, as the years tick on, they're not really launching any new big hit songs, but they're still releasing music, and they're still trying to keep their current, let's call it their current consumers of the music happy, right? And it's like, man, when's the last time that person dropped a big song that was huge or something like that? And that's kind of how Apple feels nowadays, right? They're doing enough to keep their current customers happy, right? But they're not necessarily doing that next leap of whoa, Apple, can you believe what Apple did? And as she put it, they haven't had a hit since AirPods in 2016. It's the truth. They haven't. There's been no hype around in Apple products since then. And so, they got their current clientele base. They, keep releasing the music, and people keep listening to it. But yeah, it's not the same as it obviously was a long time ago.
With Vision Pro, and we believe more and more products coming out, they flex the muscles.
Dan, is there a bearish story, though, on Apple? I think if Tom Keene was here, and I know this is how we feel, we are an Apple family. And when somebody goes to buy something, no, sorry, you can't do that. It's got to be an Apple product, because that's been our infrastructure. That's our network.
No green text bubbles. Okay?
Exactly.
None of that.
Exactly. Although there's an app that I think can pull people. But that installed base, I'm looking at, 2024 revenue estimate estimate of $397 billion.
Sure.
Like every time the Apple numbers cross, they're off the charts. Even if the growth isn't significant, there's still that installed base is enough to keep a lot of momentum going.
And if Keen was here, would he be focused on? And I think
he kind of is. We just have him under the table.
Keen's here, just like Matt. Like,
I'm an incarnation of Tom Keen. This is the hologram. I am Keen hologram.
It's an AI. It's AI generated.
Good morning.
But is there a bearish story for Apple?
But look, realistically, it's about value. Look, if you look at valuation, you look at the cash flow generation of Apple that we're going to see over the coming years. The EBITDA margins are expanding. And I think the bear story, look, a lot of the bears, they just look at their spreadsheets on Park Ave and in their tower saying this is an expensive stock.
So you don't have a bear story for Apple at all?
Because to me, the bear story, it's valuation, it's China, and I think at that point, it's a headwind, but it's more fictional Netflix story than reality that's going to hurt them. And then it's just more competition, but it comes down to valuation. And that's why this year, I think the bears, they focus so much on valuation instead of the actual underlying growth story that's happening not just for Apple, but we believe.
In all due respect, Dan Ives, like, look at Apple's last quarter. Look at the previous quarter. Apple's a shrinking business. The revenues are literally going down in all due respect. So this whole growth story you keep talking about, maybe that can play out in future years. But I mean, that just hasn't been the situation over the past several quarters.
It's the start of a new tech bull market for tech.
I mean, and this is your thesis for next year.
No, by the way, and the thing no one talks about in regards to Apple, like why is Apple nearly a $200 stock here today? And most people that understand valuations kind of look at it and they say this is a shrinking revenue story while the P's trading at where it's at. What no one talks about in regards to Apple, no one, is this company benefits massively from the huge inflows of money that consistently come into the stock market, right? Because most people buy what's called index funds, right? You go to buy an index fund or even some sort of ETF. Guess what you're likely mostly investing in? Apple, because it's the biggest weight, right? So Apple's always getting the far majority of the money that's coming into the market on a given week. And that's just facts, right? If we are ever in a market where, people aren't inflowing as much money into the S&P 500, then that could be a different story, right? Or the Qs. Like, look at the Qs weighting, right? Apple's a giant in the Qs. It's by far the biggest weight, right? Look at the S&P 500. And this is where people put their money. Like, most people aren't picking individual stocks. They're not saying, I want to buy this stock and this stock and this stock, like myself and many of you guys watching this channel do. They say, I don't know how to buy stocks. I don't know how that all works. So I just put money in a 401k or whatever, and it gets out there and it goes straight in the S&P 500. And the biggest amount of that money, if somebody's got $100 that goes in the market, the majority of that money, or not the majority, but the biggest portion of that money, it goes into what stock? Apple. It's the biggest weight, right? So, I think that's a factor that helps Apple massively that just people don't talk about enough.
2023 was a year in which every time you saw an AI story evolve, Microsoft.
Wait, we were talking about AI this year?
Well, just a little.
AI and Ozempic.
But if you didn't have AI, yeah, I know. So I get tempted by Ozempic rather than the treadmill. But on a slightly more serious note, cloud and AI have been the dominant forces, as well as balance sheets in tech. I put those three together, and let's just put Apple aside for a moment. Cloud and AI. How do I disaggregate who's going to perform well in this? What's going to make a cloud A grade and an AI A grade stock?
Yeah, and I think you hit on what's really a key point. If you look at what's happened when Nadella and Redmond at the top of that mountain from a cloud perspective, now this is more monetization for the hyperscale players, from Microsoft, for Amazon, for Google. We believe for every $100 of cloud spend the last 4 or 5 years, there's 35 to 40 incremental AI spend. That's why I'd say when you look at Microsoft, you look at Google, this is going to be just a new frontier of growth. And then, of course, you have the godfather of AI, Jensen.
Yeah, the nice thing for Microsoft is they already have had really, very respectable growth, bottom line and top line. Whereas an Apple, that's really only been a bottom line story, right? And so that's a really good thing for Microsoft, and obviously they're going to take it up to the next level, obviously, with their AI Copilot.
NVIDIA, this is really just starting what we view as a 1995 moment.
The godfather of AI.
Look, Jensen's
top
the
performing
godfather.
stock in the S&P 500.
There you go.
It's the biggest tech transformation in 30 years. Haven't seen since 1995.
Look at these J's.
Start of the internet, and we believe
are those J's?
this is actually the beginning
of
the next phase of this bull market.
I just want to know, are there a million AI ETFs that have all of a sudden come on?
You know,
watch that market, so.
There's a few dozen that were launched way before we started talking about AI around this time last year. But I do want to switch gears here and talk about EV demand, because this has been one of the stories that's really emerged, that it just feels like all of these automakers really miscalculated how much demand there would be for EVs. And now you're seeing those production targets get cut. How does that factor into how you're thinking about Tesla? Is that a bear case?
Okay, hold on. Before he jumps in, okay, let me just say this right off the bat. Just because there's a market that's booming doesn't mean you can come in and say, we're going to come in and sell a bunch of blah, blah, blah items. We just learned this 10 years ago. 10, 12 years ago. Let's go back in time. 10 to 12 years ago, okay? What was going on inside the United States of America? Smartphones were taken off. Smartphones were taken off, right? Everybody came out with a smartphone from 2010 to 2013, right? And then what did all these smartphone makers start to realize very quickly? Oh, Apple is really, really tough to compete with in this market. Samsung's really, really tough to compete within this market. And next thing you know, you saw them start to drop like flies. And one after another, after another, after another, went either under or focused their businesses on something else, right? And so the automakers have seen the massive EV growth over the years, really because of Tesla. Let's just call it what it is, right? And they say, we can do that. And now they're all trying to enter the market over the past year or two. Remember the whole competition's coming? Well, they came. And now they're realizing they can't sell these EVs for anything. But yeah, Tesla has no trouble selling EVs. They sell more EVs year after year after year after year, regardless of, whatever's going on in the world, which is a bunch of crazy stuff. They still sell more and more and more, right? Just because something is, explosive growth market doesn't mean you're going to be able to sell into that market.
Tesla, or does Tesla just command more of maybe a shrinking pie?
Yeah, Katie, I think that's
shrinking
a great
pie?
point. Look, right now it's Tesla's world, everyone else paying rent when it comes to electric vehicles. And I think they're doubling down. You look what's happened in Detroit, GM, Ford actually peeling back a little from electric vehicles, some of the foreign automakers. Look, demand's definitely softened. Price wars have come through, but a lot of those storms have now passed. I think for Tesla specifically, unit volume looks strong in China. I think this is going to be a record quarter for China, in terms of Q4. You go into next year, I think demand actually starts to accelerate a bit relative to where people thought. I think for the overall industry, it's still a massive transformation, but now you're starting.
Yeah, my bold prediction for Tesla in 2024 is they start going back up on prices of their vehicles. That's my bold prediction for 2024.
Maybe peel back a bit in terms of, okay, this is not going to 40% penetration. Maybe it's 25, 30.
Dan, 30 seconds. China is the rallying cry of the bears when it comes to Apple. So, too, when it comes to Tesla. You think about all those Chinese EV makers. How does Tesla compete overseas?
Very competitive.
They've done it. I mean, I think a lot of the price war, this was a poker move for the ages by Musk. Cut prices, focus on units. And that's why right now this has been flex the muscles in Beijing for not just Tesla, but of course for Apple, despite bear noise.
Before we started, we showed a piece on drones. Just real quickly, 25 seconds. Is there a drone play for you? I mean, all of the company, Amazon's in it, Walmart's, everybody's in it, and there's individual startups.
Yeah, look, I think that's past. I remember being a CES years ago.
You don't buy it then?
Yeah, I think that's... Look, that's why you have to separate.
Mattis is like, yes.
No, but you separate hype from the real. There's parts of that market that are growth.
Yeah.
But you look at AI, this is the Super Bowl in terms of tech market.
We're going to have a bull tech market in 2025, too?
I think this bull tech market goes, we believe, for another 2 years. That's why right now it's getting the popcorn out.
Interesting. Okay, so Tesla. Let's just spend a quick second here on Tesla, right? I told you my bold prediction about I think they're going to start going back up on price, believe it or not, in 2024. And it's going to start slowly but surely. You'll start seeing prices start to go up a little bit, maybe a $100 tweak here, $500, maybe a $1,000 tweak, so on and so forth. They might start charging additional for certain paint jobs and things like that, like they used to do. Like they're just going to be sneaky about it. That's my prediction. We'll see. Maybe they don't, but I actually think that's going to happen, right? But in regards to Tesla stock in 2024, I think I think it's going to be a very volatile year for Tesla stock. I don't think it's going to necessarily be a banger year for the stock, at least. And the reason being is Cybertruck's really exciting. We're going to get that up in really starting to roll production, right? Hopefully. But on the flip side, I look out there and I say, okay, there's a chance they could lose money on Cybertruck for the first several quarters, right? So that's a kind of a holdback that could hurt margins. We probably bottom out margins probably in the next 1 to 2 quarters, which I think that will be a big moment when you start to see margins go up again. So I think that could be very bullish, but still you could have a margin drag here for a little bit that could kind of weigh on the stock, right? And then obviously if you're going to have some volatility in the market that also creeps in, that can obviously hurt Tesla stock. I think it will get pulled down anytime the market downtrends, like Tesla's usually going to downtrend with it. So I'm not expecting a bad year for Tesla stock. I'm not expecting a great year for Tesla stock. I'm kind of expecting a meh. I think it's going to be a volatile year for Tesla stock. I think that's my opinion on it. I think it's going to be big ups, big downs. One day it's going to be, oh man, we're back. In the next minute it's going to be like, oh my gosh, this is the end for Tesla. Like, just people are going to go back and forth. The bear cases are going to come out. The bull case is going to come out. I feel much more comfortable about 25 and beyond, because 25 and beyond, I think will be margins will be increasing, I think, probably throughout the entire year in 2025. So that's a year I feel much more confident in Tesla. 2024, I think, is a little bit of a, it's going to be a little wild. Let's just call it that, okay? Alrighty, next one up here. Tom Lee. What's Tom Lee got to say about 2024? Ooh, this should be interesting.
Everyone got it wrong.
Ooh, by the way.
So
2023 S&P 500 price targets. So these were the price targets at the beginning of the year. Ooh, I got to take a picture of this. This is awesome. This is awesome. I like this. There we go. That's incredible. By the way, the S&P 500 is going to close likely at 4,800 something for the year. So, yeah, nonetheless, folks, people were way too bearish. I mean, incredibly too bearish this year.
Pretty much everyone got it wrong, except for that guy. Fundstrat's Tom Lee, a.k.a. the Oracle of Optimism, a.k.a. the guy who got it right, a.k.a. Tom Lee, not the drummer. He predicted the S&P 500 would end the year at 4,750. That means that if the S&P, folks, falls just a tiny 5 points next week, we got 4 days of trading left in the year, Tom could literally be exactly right. Wouldn't that be something? So let's bring in Tom, who, you can smile. It's kind of the Tom Lee version of a smile, but you got it really right. And the basic question is how? What did you see that all these really nice, by the way, but really highly paid and really wrong strategists at the big houses got it wrong?
Hi, Brian. Thanks for that intro. I think there were two things that we were different from the street. The first is we didn't think inflation would take a decade to defeat. I think many were bracing for 10 years of Fed fighting inflation so stocks would get stuck. And the second was because of the inverted yield curve, many were predicting a hard landing in 2023. Our view was that inflation was going to fall like a rock this year, and the Fed therefore could take its foot off the fight, and that economic resilience and the fact that companies were bracing for this storm of hikes actually could avoid a recession. And so I think that kept us optimistic, and that stocks would look like 1982 and rebound to all-time highs very quickly, which it looks like it's happened.
So in all due respect, we can't actually declare victory on inflation yet. And I know that sounds a little bit weird because we're likely headed to CPI in the 2s. But if you go back to the 70s, for instance, there were several times in the 70s that they thought they had defeated inflation, and then they really hadn't defeated inflation, and then they had come back in, and those sorts of things. And so I wouldn't bank on that happening, but there is always a potential, and stay with me on this, there is always a potential that in 2024, let's say, there's no recession, everything's looking good, unemployment rate starts dropping down even more. Let's say we go back to 3.5, 3.4, 3.3, whatever, right? You get more wage inflation that comes into the system, right? That enters the system and really starts to hit us heavier again in 25. Let's imagine commodities start going in another big bull cycle in 24, right? Where it's not necessarily going to hit the inflation numbers as much in 24, but it could be a very negative drag in 2025, right? And then suddenly, all of a sudden, CPI starts to creep back up, and then it's in the 3s again, then it's in the 4s again, then maybe it's in the 5s again, and all of a sudden the Fed's like, crap, like this freaking inflation came back again. Like, are you kidding me? And then the Fed has to make some really tough decisions at that point in time to come back in again, let's say, toward the beginning of 2025. So, and next thing you know, the market's like, oh man, like where's the Fed going to have to take rates this time, right? And so, I don't know, that's something to consider, right? And so, if you ask me, am I necessarily bullish on this decade? I wouldn't say I'm necessarily bullish on the decade. I think there's still a lot of pitfalls we can fall into in this decade, right? I think there's certain stocks that are going to perform tremendously well, and the gains are going to be ridiculous. But that doesn't mean I'm necessarily ultra bullish on the market itself for this entire decade, right? Because I am very aware that, you could have inflation come back. And next thing you know, the Fed has to come back in, and that would be much tougher next time. I can tell you that much. If the Fed had to come back in again at the end of 24, beginning of 25 or something like that, because, that would be tough.
But why did you think that inflation was going to drop? Because if that is the basis of your thesis, others also got that wrong. What did you see in the data that made you think, when things were just cooking inflation-wise at the beginning of the year, that they would slow down?
Well, Brian, it's a little. What our team did was we rejiggered inflation and identified that 86% of all this rise in core inflation was coming from housing and cars, including the fact that super core was rising. Almost all that was auto insurance, auto repair, auto leasing. So we realized that this was all just following goods pricing, that car prices were set to fall, and that would pull down inflation. It looks like that's kicking in now. And that housing just needed to get towards a 3 to 4% annualized rate, and that would get you back to where you need to be to get to 2% core inflation. So our view is it's not about travel and it's not about health insurance. It's really about cars and housing getting back to normal. And that's the trajectory we've been seeing. I think the market's recognizing that view, but we spent most of the last 18 months arguing that view.
What are you looking at for next year, Tom?
I think it's going to feel like a lot of tailwinds coming together, because we know the Fed is going to be supportive, managing the business cycle instead of fighting inflation. And we've identified reasons for capital spending to pick up next year, including that huge gap between soft and hard data. And that should lead to EPS surprise. And then mortgage rates, we think, could drop towards low 5s, maybe even 4s next year. And that would be stimulative to the consumer. So to me, it feels like it could be an early cycle.
Yeah, the scariest thing is if we see housing inflation come back, right? If we start to see home prices start to appreciate quite a bit again in 2024, and you see rents starting to go up again, that's once again, all of a sudden you have to start worrying about 2025 numbers. And if you had that simultaneously with, let's say, commodities starting to go on a bull cycle in 2024, that could lead us into some trouble in 25, right? Which then starts to get a little bit scary. And that's going to cause a lot of volatility in the market, because I'm not the only person that's thinking this. I can tell you there's a lot of, let's call it higher ups on Wall Street who I guarantee you, or if you're a big dog, like, what do you get paid to do? See the future, right? Not react to the past. A lot of times people that go on these shows are like people that are reacting to the past, and the numbers was this and this. The big money, where their focus is what's going to happen in the future. That's why you make the big bucks. How do you see this stuff? So if all of a sudden you get into a situation where people start worrying about 25 and inflation, right, you could actually start to see an exit out of stocks at some point in 24, maybe the back half or something.
It really benefits financials and small caps.
But you don't see the S&P 500 gaining another 20%, do you?
It's possible. But that's not our base case. We think it's going to gain at least 10% towards 5,200. But it probably means you first consolidate a lot of this parabolic rise in the first half. So maybe we fall to 4,300, but then we rally pretty hard into 5,200 by year end.
But you think that small caps could outperform the large caps next year? Did I hear you right?
That's right. Yeah, I think small caps might even just rise every month next year, because
every month
on a price to book basis, they're back to 1999 levels relative to the S&P, and that was a launch point where small caps outperformed for 12 consecutive years. So I think we're entering a period where small caps and market breadth are going to expand, and that's going to be good for stock pickers because they can buy companies they like, and you're going to have a decent earnings backdrop as well.
Yeah, there's a lot of companies out there, and we're not allowed to own individual companies. I can own index funds and ETFs and mutual funds. That's pretty much about it. But when I look at some of these screeners that I'll do just on because I'm bored and I'm boring, I'm like, man, there's a lot of seemingly really good growth companies that are trading at like 4 times earnings in small caps.
That's
completely
right.
just left on the trash heap.
That's right. I mean, the money's been equities have been starved of inflows. You know, retail investors pulled money out of stocks this year. And in fact, the S&P ex-FANG is trading at 15 times forward earnings. I mean, that itself is a pretty reasonable multiple. But then when you look at the S&P 600, which is the small cap index, you know, you're at 12 times. So you're absolutely right. Small caps are pretty attractive.
Interesting. Yeah. You know how I feel about small caps. Tom Lee's just a whole other level of bullish there. Alrighty, folks. Appreciate you joining me for today's video. Thanks for being subscribed here, folks. New all-time high subscribers in the history channel. If you are looking to apply to join my private group, check out the description area down there. If you want my free new workshop on exactly how I'm positioning in the market with everything going on for 2024, I'll put that as a pinned comment here today. It's about a 45-minute video I recorded for you guys that goes all into depth on exactly how I'm going to be investing throughout 2024 and kind of my thought process on why I'm doing it that way. So, all right, guys, appreciate you joining me. Much love as always, and have a great day.